Hi, folks. It's Adrian's Dunchik CMT Charter Market Ignition CryptoBirb, and welcome to today's Friday webinar. A lot's been going on lately. A lot's been going on around the new 31st of July FOMC decision from the Fed, actually keeping the interest rates unchanged. Well, it has caused a little bit of turbulence. It has caused a little bit of uncertainty. And it has also brought some downside reaction in the markets, not only into crypto, not only into Bitcoin, and also it also brought this downside reaction and a lot of turbulence to the traditional finance, to the stocks, to the commodities, indices, and so on and so forth. And well, without further ado, let's do actually take a look at this very decision from the interest regarding the interest rates, right? As the Fed decided to keep the interest rate changed the interest rates unchanged for another month, yet another month. There's a decent flat plateau type of a moment for almost a year, as it may seem. Ultimately, right? There's going to be a lot of those unchanged situation for the rate hike pauses, and yet still FOMC decided, as the committee decided, to keep the interest rates high. Right, high interest rates definitely suffocate the business the business cycle, the economic cycle a little bit, right? Because the it makes the cost of capital really expensive and the cost of borrowing expensive. It really causes for a lot of businesses to still suffocate because they are dealing with higher costs. Even though inflation has been tamed in large portion, it still, like I said, doesn't allow for decent monetary monetary base increase, because that's what it is, right? I mean, there is not much liquidity in the market. Interest rates kept at high levels. They definitely translate and transpire into low liquidity in the markets, which means few buyers, which means lower transaction volumes, which means also less of the buying power, and which is still very interesting to see so much of a strength in the last year or two for Bitcoin, for cryptocurrencies. Again, 2023 brought 160% growth for Bitcoin. Decent push above 20%, for the S&P. The Dow Jones on all the indices went up significantly. And well, this year seems to be a little bit of an extension, even though we are in the typically quieter period. As quarter three is a summertime. Quarter three is typically where the S&P kind of like introduces this sell may go away, and actually respects this quote unquote formula, and people actually may also fall for it due to the self-fulfilling prophecy reasons, right? So it turns into self-fulfilling prophecy because many people read it, many people take up the decision on selling in May and going away actually until the worst month of the year, September, clears out, and October puts in the typical market bottoms, as it would typically do for the cryptocurrencies and stocks, right? So the interest rates unchanged, turbulence in the markets, and it's all fairly visible. For instance, with this particular situation with the Dow Jones Industrials right there, right here, of 40,000, still above 40,000, which is a significant point and milestone achieved, minus 1.21%, almost 500 points downside, 40, almost 350 points, 40,000. S&P 500 hovering somewhere around the slowing down, the flattening 20-day average, the green on top, and the 50-day moving average representing the medium-term trend, which is also starting to slow down and flatten out just a little bit. And what it tells me is that in the far bottom right corner, there is this uplifting, this rising, ascending 200-day moving average, which confirms this strong, reliable upward trending movement defining the bull market, right? So what we're looking at is a decent space for the bull market, like a push. There's a decent bull market that cannot be denied, it cannot be refuted, and yet still there's a decent slowdown, local slowdown, that is just a typical of a quieter summer period, which still lets S&P hover in the all-time high area above 54 hundreds, right? 54.46, minus 1.37%, quite a decent push to the downside at their pull, with the DAX even getting a little bit lower on a light of basis, underperforming the S&P, minus 2.3% to the downside there. And if we go further along, the XLE, which is the energy sector ETF, 90.75, minus 2.63%, and there's a lot of consolidation ever since April this year. as we can tell, right? The energy is doing far less than the risk offensive sectors, than the risk aggressive sectors, such as the actual, again, the technology, for instance, right? Lately, just a couple of last weeks, like I said, similar to S&P, similar to Dow Jones, it's taking a hit, minus 3.7%. So it's doing get a little bit more damage to the downside because of the higher volatility than it would typically perform. Although consumer discretionary, right there, with like I said, with technology, with communication services, those are all fairly relatively doing well. Communication services 0.38% up, which is actually the best. Otherwise, consumer staples up 1.03%, 1.05 for the healthcare and utility. So the defensive sector is actually shooting up in a typical weaker period of the underperformance for the risk offensive sectors. So decent performance over the last months, local slowdown, and transition to the risk defensive side in stocks such as staples, utilities, and healthcare. And if we go even lower, a significant breakout for the bond prices. The long maturity treasuries are actually breaking to the upside, not almost 1% up, 122 points right there, and a significant breakout into a bull market. Yet another confirmation, right? That is actually very, very transparent. And like I said, higher highs, higher lows. Now it broke above the 120 base, magical kind of like round numbers, and well, the averages are up. The averages are up. The 200-day moving average finally has started curling up and curving up after a very long time of the down sloping price action. And here we are, higher highs, higher lows, moving averages all curving up and pointing to the upside. The decent breakout, decent push breakout, significant push breakout over 120 points. So there's a lot of bullish factors, right? And then there is a hint from the Fed, from the FOMC, not only about the rates kept unchanged, they were also hinting at a potential actual rate cuts for the very first time in a long manner, in a long time, in a long horizon, to refrain from the interest rate hikes, pauses, and actually switch back to the monetary easing, which is typically quite bullish, significant factor, positive factor for the economy, positive factor for the expansion of the economy, and bringing more liquidity into markets, which typically translates into bullish markets as well, right? And if we are to see how Bitcoin is taking all of that heat, well, here we are, basically. Here we are. And this is a long-term chart, one of my favorite charts. That is Bitcoin against US dollar with the correlation coefficient measured in the bottom tab in the bottom screen at minus 0.60, right? Minus 0.60 is the strong negative correlation of S&P of the Bitcoin against the S&P on a 7-week basis. 7 weeks is a medium-term period. So medium-term correlation, typically it would flatten out and it would bottom out at aggressively deep levels in minus 0.9, minus 0.85, 87. In the historical bottoms, the cycle bottoms, last time it happened, it actually brought the bottom at the $15,000-$16,000. Then it actually brought the historical seasonal bottom at around confirmation right around $26,000-$27,000. And here we are, put out another extreme value at minus 0.90 with very strong negative correlation where Bitcoin was falling, S&P was doing fairly nice, breaking to the new all-time highs. And here we are marking the third significant low of this bull market cycle that started in the November 2022, right, where the FTX putting the bottom in the markets basically by collapsing. And well, ultimately, like I said, even though we don't know the future, the history can be of lesson, and the history can be of beneficial information that it seems that it's actually being transpired right now in a positive fashion, right? And let me just put the screen for a moment right here. That's what I wanted to show you, right? Minus 0.59 in the bottom right corner, minus 0.60 fluctuates, it changes 7-week basis. Again, medium-term classification. However, this medium-term classification helps us time and improve actually a little bit better on the arguably on the timing of that market, right? So if we are to come back ultimately Let's switch it back. Kuba tutaj do wycięcia będzie. If we are to come back and share this tab instead, what it's going to tell us, well, not only that, well, I was actually lucky to snipe the very bottom at 54 200s right there. Decent push ever since, right towards the high of almost $70,000. That gave a decent push from the low to the peak. However, more importantly, right now we are actually from the very low. We're about 19-20% up. That's not a bad record at all, right? Actually aligned decently with the positive July expectations. Even though there was some turbulence, like I said at the beginning, there was some massive push. We actually did manage, right, to climb back above the broken level, causing and confirming that a region that slide below $57,000 to be an overthrow. An overthrow is a failed breakout. False breakout patterns tend to perform better in the opposite direction than initially anticipated, right? So typically what happens is if you see a breach of a support and it shows enough strength to come back, right, and confirm this overthrow pattern, this false breakout, it actually not only encourages the short positions that were activated right there to close, causing the short squeeze, it also encourages the buying traders, this buy side of the market, basically to contribute and join because there's a major strength signal, the turnaround, the mean reversion that is happening, right? And speaking of the mean reversion, the 200-day BPRO trend line is actually right here, the orange curve that is fluctuating from orange to grayish to orange right now. It shows a lot of indecision. It shows, and it accounts for the sideways period that was basically lasting since early March this year for a long time, right? And all we are seeing is a long-term bull market interrupted with this medium-term close to an even long-term correction from $53,000 all the way to $74,000. That's a decent retracement from 74 all the way down to 53,500. It was 27% slide. Typically 15, 30% retracements are very strong and strong enough to place the local median secondary bottoms, secondary truths to the Bitcoin structure actually from the long term, right? In the hindsight, it may come obvious and it may look obvious as it was the perfect buying opportunity, which is exactly what encouraged me, by the very proof attached right here, to chip in even more for my long-term buy and hold portfolio for Bitcoin because it was decent worth right there shot. And this shot, like I said, came from the fact that even though the BPRO was a little bit BPRO trendline 200, the BPRO trendline was a little bit more sensitive. I also like to buy the touch points, of the retracement of the mean reversion complete for the 200-day moving average, simple arithmetical average, right? That was the case when I actually operated and purchased Bitcoin on the breakout on $20,000, got it right there at around 22, I think it was $1,000, on the pullback on the mean reversion, exactly what had happened. Then September 26th, which was the worst day of the worst month of the year, which is something that the Jeff Hirsch and I, the godfather of the seasonal studies, Jeff Hirsch himself and myself, we did release on 26th of September last year, Bitcoin seasonality piece saying that remember to buy in September and buy in October to keep your portfolio sober, which is exactly what followed along with a decent, magnificent push from Bitcoin and from these regions actually taking us, like I said, even 180% higher. So historically, on the rising 200-day moving average environment, confirming bull market, not just because I say so, but because this line represents and defines the bull market on its own, where the persistence and the continuity in one direction and the actual angle on the slope of the average, it tells you that we are dealing with a bull market and buying the dips in an overall rising environment of a bull market. And this tends to be a buying strategy that is profitable in the long term and in hindsight, right? Even though it's difficult to time perfectly the entries right there, it may be still important and relevant to keep in mind that for the long term purchases, right? Privately, I'm gonna probably start cashing out next year, a year from now, into second half of the 2025. That's what I'm planning to start, kind of like going, taking weight outside of crypto and putting in different other markets, such as the real estate, such as gold, silver, precious metals, other businesses, investments, acquires, and so on and so forth, right? So anything, probably outside of crypto is going to be safer than crypto, because historically we're dealing with 2024 that is a decent, very strong, abnormally strong candidate for significant growth for crypto, which is already being given, like I said, on a year-to-date basis. There's a decent performance from Bitcoin, and at the same time, if I were to check correctly, actually, what's that going to be for Bitcoin on a year-to-date basis? On a year-to-date basis, we're talking about 52%. Okay, 52% year-to-date basis for the S&P. Just for comparison, for the S&P, we're talking about year-to-date 15%, not even that. So quite a decent outperformance for the Bitcoin. And 2025 seems to be exactly what 2021 was, right? So there's this 4-year stock market presidential cycle, and Bitcoin subscribes to itself to it very well because of the correlation, because of being an asset class, because of being fully institutionalized right now by BlackRock, iShares, by the spot ETFs of Ethereum. The institutional money are not only knocking on the door anymore, they're coming in heavy, they're coming in big, and that also comes with the numbers, right? And those numbers are actually right there with the cumulative spot volume. I think this there's a little bit of change. Let me check if that actually improves. Although there is a trend line, and just last few days, I think there might be some error going on for that particular one. Although what's relevant is that we're looking at a decent cumulative volume. We're looking at the decent market share capture with as of August 1st, 93%, 93.96% is actually belonging to the spot ETFs instead of the futures, right? That tells us that there's long-term focus. Futures are not used for the long-term focus because of the fees, because of the speculative aspect often offering leverage that is unsafe and for the long money. The big money doesn't need leverage, right? Big money is leverage itself. And yet here we are, the total net flow said negative as of 30th of July, or the 31st. And the 31st was total net flow was 0.3 million to the upside positive. The day before was minus 18.3 million as the 30th. So we are just right above the break-even level. And well, the industry is still led by the IBIT iShares from BlackRock, 22 billion under assets under management, AUM, GBDC, Grayscale BDC, spot ETF, 15.62%, Fidelity right there, 12.59%, billion, 12.59 billion, 15.62 billion, and 22.08 billion. There's a decent advantage of IBIT against the other spot ETFs, decent performance, decent domination. And well, the spot ETFs are working well. There is an institutionalization of that. There's no way to deny that. And if I were also to show, well, what's cooking ultimately, on the shorter term basis, then we are strictly talking about the freshly broken to the downside canceled bull signal that took us from anywhere. It was actually right here with the bull breakout from 62,000. It took us to 66,600 approximately, causing and resulting in about, what's it going to be? 8% growth. It's just been captured for the bearish, on the bearish side, right? It's just been caught off guard. The bulls have been caught off guard with the breakout, with the strong, decent breakout below, and the close below $66,000, right? Luckily, bulls were the longer term daily bulls were saved yesterday with 576, sorry, excuse me, as the high term from trailer stopped defending the long-term bullishness of the trend. So here we are again. There's a lot of sideways. Makes us and causes us a lot of suffering to us, the trend followers, right? Because we like to have the steady trend following aspects. If there's no trend, if there is a sideways type of a table tennis ping pong type of an approach, up and down, up and down, up and down, and it often kind of like just often throws back, kicks us out of the positions, on the both sides of the edges of the trading range. This is typically what happens. So sideways is exactly where I personally lose as a trend follower 70% of the time. Those are small losses because I apply strict risk management. and maximally 2% of the account at risk, although it's typically smaller in the sideways. And I do expose myself to long-term, to larger trends, larger tails, such as the one, for instance, that took us from $40,000 right here, approximately 41, took us all the way for 2 months or so, took us to what it was, $68,000. That's what it was, right? That was the entire rally. By the way, all the trades are documented. All the trades are there on X, on YouTube, on our Discord profile, and so on and so forth, right? They're shown transparently, just like I would show each and every single position uh, with the purchase, just like I would do right over here, right? And well, so local slowdown, local congestion of the bearish signs, right, in an overall more dominant bullish tendency. So there is quite a discrepancy. This discrepancy is a source of uncertainty, is a source of distress in the market, is a source of, like I said, this overall stability, right? This almost random walk, all those kind of like more or less random types of oscillations, a little bit up, a little bit down, a little bit more to the upside, a little bit more to the downside, and it just oscillates like that until in the foreseeable future it actually decides to you know, push above all the boundaries and rally towards the new all-time high, which typically I would encourage and expect towards the end of the year, November being 40% upwards positive month, as opposed to September, which by the last year returned 6.5% negative as the only negative losing month of the entire year. So here, if we are to take a quick look at our partners at Soil, for the token, you know, how the token performs. Well, they have just climbed above the 200-day BPRO trend line, right, which is exactly this line, 200-day BPRO trend line, which defines this, like I said, long-term trend. It's a little bit more sensitive. We are climbing right above this trend in a decent bullish setup with the support at $1.1, $1.11, $1.11 approximately, keeping this strong resistance, strong support that used to serve as a resistance. Decent turnaround, like I said, in the area of previous strength, right? There is this decent polarity change principle that basically takes the previous weakness, or the previous previous weakness, and turns it into strength. It shows strength or show weakness before, and what is typical, like I said, the weakness, as in the rejections, they finally got kind of like weighted and turned over, broken by this bullish thrust that actually later evaporated, as did the entire market, right? The entire market kind of like moved into this standby type of a situation mode, where a lot of altcoins, a lot of Bitcoin, like I said, you know, started losing. Bitcoin 26% to the downside. A lot of altcoins suffered even more. So that Soil, they actually suffered quite a bunch of 80% distress right there. And here we are. You know, it's quite a decent push also to the upside from the low to the high. It was 136%, almost 140%. We're back on the bullish track, although the trend is still much more sideways oriented than bullish, right? So the way I see it is some overall consolidation, and the bulls are trying hard to break back above into the bullish theme. Although before it happens, like I said, we are still dealing with 2 months of quietness and silence, August and September. So much bigger chance on average for all the cryptos and stocks to perform a little bit back and forth, like I said, sideways, range bound type of environment, rather than straightforward fully blown out bull market phase that I would expect personally towards the later part of the year. So decent setup, we are there. I'd still be careful because even though there is a decent momentum, kind of like push above the 50-day trend momentum, the averages are, like I said, are not falling anymore. However, they are sideways. Sideways averages tell us that the market is sideways on average, right? That's what it is. So it has fairly decent, better chance of performing in that kind of like non-directionless regime before it actually catches on fire, which is what puts those incredible, magnificent rallies just like this now went off 6x, almost 560% in just no time, just a matter of a couple of days, right? So that's it. We suffer a lot of days to see them all kind of like, major comeback, major recovery in just a couple of days for the entire bad price action that happened. And another partner of ours, is AZERO, right? Aleph Zero, which is incredible layer right there with powerful powerful fundamentals. And they did suffer a lot, from this breakdown point from 70 cents all the way down to the recent capitulation at 33 cents. Put later on massive push from, like I said, 35 cents all the way 65% to the 58-cent mark. We are still in a bearish tendency, which is clearly shown by the 200-day arithmetical average, which is this grayish line, and the 200-day BPRO trend line, which is actually right there, quite straightforward, negatively oriented to the downside, right? So the chart is a little bit destructive. And what it tells me is that there is a depreciation against the fundamental value, right? The fundamental value remains strong. The intrinsic value of the project is very strong. And there's a decent undervalued situation for anyone that decides, to invest in on value type of investing, right? They see big value and the project price is up underappreciated. This typically causes the mean reversion to come back. And if the mean reversion happens in the short to medium term, 0.65, 0.70, again, could be the major arbitrary level for decision point, right? To come back to the level that was previously broken and see as the arbitrary what the market tells us, what the market decides. If it's to the upside, is actually made pull it back again towards the $2 mark, right? That's not something that we've not seen before. One more shout out comes due to our partners at CREDI, right? Which is also quite a significant push, over the last year, if you will, right? The last year brought from the lows to the peaks almost 32x, right? Almost 3,200% push in just half a year. Ever since, just like the other partners, just like the other projects that we know and that we observe, that we monitor, also kind of like suffered significant drawdown, 70-80% dip, from where Bitcoin stalled again, from where all the cryptos kind of like went nosedive type of a mode. It caused a lot of distress, although there is a decent fluctuation lately. Like I said, the trends are kind of like calming down a little bit from more downside to the more sideways type of an environment. The more sensitive 200-day BPRO trend line is, like I said, more sideways oriented. 200-day simple more arithmetical average is climbing upwards. There is a decent fluctuation between the bull and the bear right now, but this CREDI talk and the CREDI has just entered the bearish stance on the high time frame trailer basis. Stop with 0.02 dollars right there, 0.0234, which is the significant resistance mark, and sideways fluctuation after decent pull down in the area of previous, like I said, previous weakness that was broken with the push above 0.13. Can now be expected to serve as some sort of like a support based on technical analysis works and arts. So another instance of highly valuable intrinsic value project, for value type of investors to consider. We still need those bullish signals to consider, again, just decent technicals to follow along. Although a lot of sideways type of environment seems to be coming, not only to the markets, also, like I said, to the projects, to the investments that are also applicable to other markets. Kindly recommend it, guys, because we're still searching for reliable traders for our Swiss-based hedge fund partner, Nomad Fulcrum, for our inverse prop desk program, which is basically against the typical rip-offs that you would see with the typical prop desks, right? That are going to rip you off high valuation fees, give you no value in return, and you just waste a lot of time. Here we are with an inverse prop desk that basically gives you a lot of opportunity to prove yourself over demo accounts, which means you cannot lose. There's no way you can lose money. There's no financial risk. There's no financial risk. You're not losing your money. You're playing only with demo accounts, with paper money. And if you show reliability, if you follow along the instructions well, if you prove, like I said, that you're a good trader that you can rely on, that our hedge fund partner can rely on, you're gonna get a real salary, real career in the Birb Nest with our team. You're gonna also join, not only get this full trading equipment, the education, the resources, the quality accredited information to become better traders at no cost, no evaluation fees, no risk. Like I said, You still get profit share from real money from our hedge fund partner, still get salary and a contract from the Birb Nest, and basically start over a career as a professional trader. If you consider yourself reliable, go ahead to the birbnest.com/inverse or simply go and visit the services under Inverse Desk and well, fill in the questionnaire, check mark the terms and policy, and well, fill in the questionnaire, and I see you on the other side. And I've been your host, Adrian Zlunchik, CMT CryptoBirb, for today's session. Stay safe, stay cool. God bless.